Today is Monday, July 10th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research here at ADMIS, and filling in today for Alan Bush, we have Blake Robben, a Senior Broker at Archer Financial Services. Steve, we've seen some good action in the grain markets over the past couple of weeks. Is this 2017 summer rally fact or fiction? What are your thoughts regarding current prices?
It's interesting in that we have two separate weather models that forecasters look at. The European model would put a ridge over a lot of the U.S. Midwest July 14th to 24th, and that could affect 28 million corn acres and 22 million bean acres. So we're up against some prices from 2016 in which November beans are trading right around 10.35. The highs then were 10.43. And for D's corn, we're trading around 4.13. The high was 4.22. So if we actually have a ridge developing over the next 2 weeks, we should probably trade over those prices as the market feels that the ridge will impact yields and finally production and carryouts and things like that. Some people are using right now a yield for corn at 165. If this ridge develops, they're going to take the yields down to like 156, and that would probably take D's corn to 475. The other models, the American models, say that this ridge is going to move back to the west the second week. And so if that's true, today could be the high of the market for the summer.
Steve, if we do take out those 2016 highs, what type of fund activity do you think we'll see?
Funds have a relatively small position. They're short about 100,000 contracts, corn, beans, wheat, meal, and oil. So they either need to buy 300,000 contracts or sell 300,000 contracts. So they'll decide that probably next Monday.
There's a grain report Wednesday, July 12th. Does this report matter much, or is we all weather right now?
It's 100% weather. The only thing they could do is lowball the U.S. spring wheat crop, because the average guess is, let's say, 400 million bushels. There's some people who think that the crop is small as 340 million bushels. And the one thing about this, no matter what maps you look at, there's not a lot of rain forecasted for the western part of the spring wheat belt. So other than that, they're not going to make big changes. Only 4 times in the history have they ever dropped the corn yield down because of poor ratings. Right now we've got 65% of the corn rated good to excellent. 2012, the last time they brought it down, the crop was rated 38% good to excellent. So there's not the ammunition there for them to lower the corn yield. Globally, we don't really have any problems except maybe in the Ukraine, and so they probably won't make a lot of adjustments in global supply and demand. So I think everybody's looking ahead for the weather to be the key factor in prices in the grains.
Blake, other than the grain report this week, what are the main events for this week's economic calendar?
This week's economic calendar is very, very busy, starting with Wednesday at 9 a.m. Fed Chair Janet Yellen will appear before the House Banking Committee. It is widely recognized that she will be scrutinized on her interest rate policy of increasing interest rates, because we all know when you increase interest rates, you increase borrowing costs for everyone, including the U.S. government. I think a lot of questions will be asked, why is she raising interest rates when there's no inflation? So definitely look for that. Wednesday at 1 p.m. you'll have the Fed Beige Book, which is a summary of commentary on current economic conditions by all the Federal Reserve districts. That's something to also keep an eye on. Thursday we've got the 7:30 Producer Price Index report, which gives you a report of either an increase or decrease of producer prices. That's something that also will be scrutinized. 9 a.m. on Thursday, Yellen will be in front of the Senate Banking Committee, basically outlining her plans on the balance sheet reduction. The last time they met on June 14th, the Federal Reserve talked about reducing their balance sheet, currently at $4.5 trillion, but gave no details. So maybe look for some details on her reducing the Fed balance sheet. Also on Thursday, the Congressional Budget Office will be releasing its analysis of President Trump's fiscal year 2018 budget. Also something to look forward to. Friday, we have the CPI, retail sales, and consumer confidence. And also we have the start of second quarter earnings. Second quarter earnings are expected on a whole from the S&P to be up 6.6%. This compares to a 12.6% increase in the first quarter. So it's widely expected, earnings will be down, but still up year over year. Big names to report on Friday will be JP Morgan Chase, Wells Fargo, Citigroup, and PNC Bank. So that's a busy economic calendar, Kurt.
It is. I know that you follow both the S&Ps and gold markets fairly closely. What's your outlook for the September E-mini and the August gold?
Yeah, September E-mini S&P right now, ever since the Fed came out on June 14th and said that they were going to raise interest rates by a quarter point and reduce the balance sheet, you would think intuitively that would be negative for stocks and bonds. However, 2 days later, stocks made all-time highs at 24.51.50 and bonds made new highs. Bonds have backed off since then, and so have stocks. If you look at the daily pattern of stocks, we've seen a pattern of lower highs, lower lows, with major overhead resistance at 24.36 to 24.46. So I would like to see an open high, low, close bar above 24.36, and then I think you could have another leg up. Otherwise, I think you could test lower levels. Your weekly bull bear line comes in at 24.18. Any close below 24.18 would suggest a move to longer term support at 23.94, then 23.75. Conversely, gold is testing its long-term support levels here. I think we just had a level right around 1200. Right now we're holding that 1200 level, but this market really needs to get a close above 1221 in order to see the market turn around and head higher. So long as we stay below 1221, you could test longer term support at 1194 to 1196.
One more question for you, Blake. What's your opinion, current opinion of the U.S. dollar?
Yeah, the U.S. dollar index, since it's peaked January 3rd of 103.50, we've been in a 6-7 month downtrend, and we've tested long-term support at 95.35. That 95.35 needs to hold, otherwise you could see it go down to 94. Long-term resistance comes in at 96.75. Need to see a close above 96.75, otherwise this long-term dollar decline could continue. And I just cannot see the dollar continue to decline with these commodities declining also. So that's something to also watch for going forward.
Steve, let me turn back to you briefly here. Could you please provide viewers a quick recap of some of the other markets?
As far as bullet points go, I think that we've seen the bonds breaking lower, 30-year bonds, and I think that prices may be oversold, but there's really no sign of inflation. When we look at the energy markets, I think there's concern right now, short term, about oversupply, so it could put pressure on the energy markets. And when we look at commodities, I think it's really important that we figure out what the dollar is going to do. You know, ever since the president has started talking the dollar down, it's gone down, and I think there's some concern about other economies doing better than the U.S. if a lot of the Washington stimuluses are delayed, or maybe not even see a tax reform in 2017. Sugar market has really seen a steep decline all the way through this entire year, and last year I think the news is still fundamentally negative from a weather perspective, but the funds have a record short. So we've had a little bit of a bounce from that oversold situation, but the news is still negative. Live cattle has backed off from their season highs, and there's a lot of discussion between, what's going to be more important, the bigger placements or maybe the thought of bigger demand, especially sending beef to China. So right now, short term, we're seeing a recovery, but the cash and the beef trends tend to be lower. And as far as the hogs are concerned, you've got a situation in which the market continues to work higher. The pork product cutout values continue to push cash prices higher, and so with all of this potential export demand, with a lot of this pork production in the United States owned by the Chinese, you probably could see continued upticks in pork prices.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.